Hello friends, we'll be discussing certain details about the definitions and features of a partnership accounts that we have in our syllabus. So when we speak about partnership accounts, we basically talk about certain people or a group of people coming together and forming up a business. So what basically partnership means is that supposingly if this is you and this is your friend, in current financial conditions or in the current financial market, we understand that one person carrying out the whole business becomes a little tough, becomes a little difficult for that person to handle all the financial transactions like the cash inflow, cash outflow, handling all the assets, handling all the liabilities, etc. And with his expanding business, he needs one person or certain other people to handle that business on behalf of him or rather with him. So these people who join him in handling his own business, they take that business as their own and they handle their business as their own. So when these people they join in, they are called as partners. He ties up with them and he runs his own business along with them and calls them as partner. Now why do we call them as partner? Because they handle all your affairs which were once earlier yours. They handle all these transactions which were earlier yours. Now when we talk about handling transaction, handling business, all these details are very important when it comes to definition and feature. Now what partnership definition exactly means? It is an association of people, it is a group of people who come together to run a business which exists. Hence the third would be business existence is required, and they share a profit as per the profit sharing ratio or equally, whatever the case may be. And the other thing would be when they are partners, they run with an unlimited liability. That means if in any case there is a loss that they have to suffer, so just like how they share the profits, they will be sharing the losses in the same way or in the specified ratio as per the deed of partnership would be. So when we talk about the definition and feature, it is a group or association of people that come together to run a specific firm which is related to a business that exists, and with this association they have unlimited liability attached to it, and there is one person who does the business or rather on behalf of them or rather with them, and they also share the profits and losses in the profit sharing ratio or any other ratio as they may deem fit or which is as per the partnership deed. So accordingly, when a partnership exists, all these features are really important to understand that this is partnership account. So probably in our accounting syllabus or rather as per accounting standards, these features are really important. So one would be association, group of people. Second would be when they have a specific unlimited liability, or rather we can say just unlimited liability, or as per any specified deed, the liability what they're supposed to take care of. They have people where the business exists and that business is being run by a specific firm or rather a specific group of people. And the next part would be where they have a profit sharing ratio where the profits are equally divided or rather they are divided as per the profit deed or as per the deed of partnership, whichever the case may be. And the next part or rather the last part would be where there is one person doing the business on behalf of other or with other people as well. So this is like active partner, dormant partner, the same case here. So active partner is the one who actively takes part into it. Dormant partner is the one who just has a name on a deed of paper but doesn't actively take part into the functioning of his own business. So these are the kinds of partner that we'll have. We'll understand them day by day, or rather when we go through with this chapter ahead, we'll understand each type of partner what we have. But right now we have only these features available with us. So it will be limited liability, it will be unlimited liability, that depends on the deed of the partnership. Second would be whether one person is handling the whole business or rather on behalf of them, or rather we can say that one person is taking care of this specific business with others as well. So it is either on behalf of them or with them, either of it. The next one would be whether there is a profit sharing ratio or not, or whether they are equally dividing the profit or as per the profit sharing ratio, whatever the deed of partnership may describe. Now, the next part of this kind of features define that whenever you figure out these features in any kind of partnership, or rather in any kind of transaction details between a firm, understand that is a specifically mentioned partnership firm. So this is with unlimited liability. There was another business proposal that was provoked, or rather we can say that that was caught up in picture, which is a limited liability partnership. Other features remaining the same. The limited liability partnership says out that all the partners will have a certain amount of liability. That much, how much capital they have invested into this business is the only liability that they have. So anything apart from that won't be a headache for them. So that is called as limited liability. So for probably you have invested 10 lakhs of capital, of your own capital in that business. Tomorrow, if the business shuts down or if there's any kind of loss, the extent to which you are liable to pay up is only for that much amount what you've invested. That means 10 lakhs capital what you've invested will be taken from you, it won't be given back to you, and that amount will be then moved to bear the losses. Or rather, if the loss is around 1 crore, you have another 6 people as partners, so 10 lakh each partner, which brings up the total of 60 lakhs. So out of that 1 crore loss, 60 lakhs will be taken from this partner's capital and the loss will be paid off, or rather the liability will be paid off. Now the other 40 lakhs will be paid off by selling of the assets, or whatever the case may be, as per the partnership deeds, or as per how the business reconciliation or the merger or any acquisition is done for that specific business. So these details are really important. Now when we talk about partnership accounts, it's very simple. Partnership is a group of people, like 10 different peoples coming in together, forming a group and then running the business. Because in the current market or the current financial situation, running the whole business on your own becomes a little difficult, becomes a little tidy, and rather we can say it's a little tiresome. So what we do is that we have 10 different people, because when 10 different people work on one project, or rather we can say that work with one business, it becomes really easy to handle that thing, or rather easy to handle all the sources, and you have 10 different viewpoints as well to deal with, and this can also help in expanding the business to another level. So this is the reason why we have partnership accounts in place. This is the reason why partnership is another form of business that we have in accounts, or that we have in a current financial structure. So I hope this video gave you a lot of clarity about what kind of financial, or rather partnership details we had to talk about, what is the definition and what is the features of it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.